What's up out there in viewerland? Hope y'all are doing amazing. I think I'm live. If you can hear me, just give me an I can hear you down below. I wanted to come on tonight and chat about the market, where it's at, what's up, how it's looking, and ultimately what my thoughts are on where we're at right now. So, without further ado, we've had a pretty, I would say, just an uneventful week, really, since last week when I talked. We are still sandwiched in that 33 to 45 zone. And let me share my screen and we'll go through where we're at. We're kind of, in terms of where the market is right now, let's move to another chart that has better data, this one. So looking at this one on the advanced chart, what we're doing right now basically is we're kind of just sitting here. Like I talked about last time, we were going to hit this band and we were either going to pump through it and test, or we were going to get rejected and dump. And we basically got rejected and dumped down. And so you can see on this chart, let's look at the monthly, that we've been rejected like a bunch of times. So when we kind of started falling out of the bull market flavor, what happened was, or the top of the bull market, what happened was we came through. As soon as we fell through this, we just dumped straight through. And then we tested it and dumped straight through. So at this point, we've tested it on the monthly 1, 2, 3 times, and we've been rejected. We've been rejected. We've been rejected. And so this is what it's going to require, getting above this band and getting above this moving average right here, this blue line in that spot. It's like 48.7 right now, to be able to move up and continue on the bull market, bull run. If we keep getting rejected off of these bands, then what I would say what is going to happen is we're eventually going to fall out of this channel we've been in. So notice I've got the yellow lines to kind of mark where we're at. What we're doing is we're just stuck in this channel. There's this part and then there's this part. And so we've come up, and as you can see, we've tested the top 1, 2, 3 a bunch of times. So guess what happens next? Well, we come down and we actually test the bottom if we can't survive that one. So you can see on the monthly that we came all the way down and we tested down that 33 zone. Then we tested it again and we came up and we put in a higher low, which is a good thing, somewhere around 34.3. And then we came back up and tested. And then if we hold this one and we maintain this low at 37, then that's a good sign, because that means we're incrementally pushing the lows higher, which would probably put us in a place to test it again and then put a higher low and then test again and higher until we break through. Or we come up and we test and we just fall straight through and we go down below this like 33 zone. And so in my opinion, if we stay in this, the longer we stay in the zone, the more likely it is we're going to fall through it eventually. And so when we do fall through it and we go through this zone, it puts us in on the path to going back to going into this zone. So if we fall through, if we actually get low enough to fall through this 33 zone, puts us in the 33 to about 25 zone. I've kind of mapped out the actual bottom probably being around 20 right now, and that'll gradually go up based on the 200-week moving average, which is, you can barely see the line. Let me turn off the rainbow, but you can see that this blue line right here kind of puts that, and I put the yellow line where the tip of it is. But ultimately, when we have the logarithmic bands open, we can see that this is kind of where we're sandwiched right now. And if we move into a weekly chart, we can see it just the same. So we're just stuck. We've been in this zone for a while. We fell through in January, and then we came down, we came up, we came down, we came up, and we've been rejected every time. The good news that I did like here was on these ones, you can see this line here is a long-term, it's been like support and resistance since the peak of that previous cycle. So it was here, and then we broke through it and punched, and then we fell through it, and now we're basically riding on it. And what's interesting about this one now that I actually like is we've fallen through, we came back up, we tested that line, fell through, wicked off of it, came up, fell through, and then came all the way back up, and now we've wicked off of it again. So if we can use that as a sort of support line, that's good, because it puts us in that zone, like I was saying earlier, to where we have these higher lows, which is a good thing because it'll get us closer and closer to testing the top. It'll give us more touches up here and less way down here, which makes it more likely that we will break through this. And so if we do, like I was saying in the last live, if we do break through this zone at that 46,540, our next stop is to test that 48.9. And if we can clear both of those, that makes me confident we're in a bull market. Now, if we go below and we put in a new bottom and we go below this 33.9 zone, then that makes me confident that we're probably going to head into the bear market territory, and we're going to come down and test the 25 zone. And we may even wick off down in this 20 zone. So these would be where we're headed if we cannot maintain up here. And this is up here is where we're headed if we could maintain. When we look at the support band, obviously you can see that's right where it is, where those logarithmic bands that I was just showing are. It's basically coinciding with this line and this line. So this is the bull market. If we clear that, we'll probably do okay. If we don't, we'll fall through here and we'll go down and we'll test like 25K zone. Right now, it's kind of a middle area. The market it's looking like it wants to be bullish. When I look down here at the MACD, which is right here, when I look down here, I can see this starting to peel over. And so right now, when this line is on top, it's sort of bearish. When this moves to be on, when the blue line moves to be on top, then it's bullish. And so right now, this is kind of wanting to peel over. You can see that the volume of the red is starting to creep back up on the weekly, which is good. And then if we move into the shorter time frames, we're seeing sort of the same thing. I mean, we came down here, Biden announced those, say, the new crypto regulations or whatever. He didn't even talk about anything. He just said words and it dumped the whole market, but it wicked right off there and it pushed itself back up. So it's kind of been fighting this 39.3 line lately. So if we can clear that, we'll probably move back up to like maybe hopefully the 42 zone. But what I like about what's going on over here on the daily as well is you can see that sell volume starting to taper off a little bit. It's starting to come back up, and you can see this line starting to curl over, which will give it the opportunity to start coming back up, and it might give us some green. I think the 4 hour is a really good indicator of where the market's headed, because back when the 4 hour was here inside of my chat group, I said that we're going to probably dump and we're probably going to move down to the like 38 zone. And that's exactly what happened. We moved straight down because the lines crossed and the orange line came on top, the blue line came on bottom, which is bearish and caused a dump. But as you can see now, this has been a bit of a battle recently. We started to peel back up. It got rejected. This thing acts as resistance and it pushed it back down. But now we've been able to clear over it. So now we're in this bullish zone. And so what that means is we're going to see an uptrend, and you can see the volume starting to creep up. And so we're still in this bull uptrend as long as this keeps moving forward and it doesn't peel back over and push us straight back down. So right now it is a good sign because this was a battle right here and it was able to clear and move through, which puts us in a place of bullish momentum. So I think we'll see within the next week where it wants to head, because we've got this zone here where we essentially bottomed out. We've been kind of stuck right here for a while in this zone. So if we clear that, we're probably going to put us in a place where we have the power and the strength to move back up, probably test like the 40K zone. If we can't, we're going to come test this again, and we're going to bounce, or we're going to fall through and just stay in the zone. So right now we're kind of in what I call like purgatory. There's a case for a bull market. There's a case for a sort of a bear market. I wouldn't say we're fully in either or just yet, because we're still stuck in the zone. We clear the top of this, we're in bull. We go through this, we're in bear. And so we're kind of in this zone where we're stuck right now. And it's going to take a couple weeks to maybe a month to really see Bitcoin make a decision as to whether or not it's going to move up or it's going to fall straight through. And obviously, when that happens, the alts follow. So there's no reason to even look at the alts if Bitcoin's not behaving. And so as you can see, they kind of just follow whatever it's doing. Everything's sort of positive right now because the daily candle closed. And then the other thing I wanted to talk a little bit about was Fantom. So a lot of people, I like Fantom a lot. I like the network a lot. I use the network. I think it's wonderful. But they had a tweet came out from one of the Fantom developers that he was leaving Fantom, and it crushed a lot of good projects. It crushed Fantom itself, because this is when his tweet came out. It pushed it all the way down. Fantom was right here testing its bull market support zone. And then when he tweeted that everything dumped straight down. My opinion on it is one person probably doesn't control it. One person causes panic and like moon boys to run away, but you can already see the market coming back, and you can already see Fantom filling up again. You can see it went from nothing to congested, and you can see money starting to flow back in. So I'm not really worried about it, but it did bring up a good point that I wanted to talk about in this broadcast. When I talk about the fact that I like these networks, it doesn't mean that I'm collecting these networks right now. I'm not the kind of person who tells people just to buy every dip, because you eventually run out of money if it keeps dipping. So what you want to do in these times, or what I do, and this isn't financial advice, is I put what I have into stable coins and I farm stable coins. So that way, when the market turns, when we do clear this zone, then I can buy back in the market and ride the wave back up, and then get out when we hit near where the top is. And so that's kind of what I want to talk about. I will look in a couple different places. I will keep a lot of what I have in Anchor, because Anchor pays out 20% APY on US Terra. And so if any farm is lower than 20%, I'm not going to use it. I'm just going to put it in Anchor because it's safe. It pays me out in US Terra, and I just continue collecting that coin. But if I find a protocol that does have a better yield of 20%, then I'll put it into that protocol. And for example, one that I really like right now is Liquid Driver. This has kind of been a little secret, but this day US dollar coin pool, these are both dollars. That's a dollar. That's a dollar. They don't move. They're both dollars. It's at 58% APR right now. And you get paid out on Liquid Driver coin. So you can either, and you get paid out in Liquid Driver and Deuce, and Deuce has been pumping like crazy lately. So you get paid a big chunk in Deuce, and then a little bit in Liquid Driver, and then you get the trading fees. So you get two different coins. And so you can sell both of them and just put it right back into this pool, or you can go in and lock it and earn more rewards and play the whole game. Like I've talked about previously, you can take your rewards and put them in like Beethoven and earn 70% on top of that, and then take those beats and then sell the rewards there. So you kind of can create looping strategies. But at the simplest level, what I like to do is just sell what I get and put it back into the stablecoin pair so it can continuously compound. But if I can't find something like that, then it just goes right into Anchor, because that 19% APY keeps it in a pretty good zone. So for me, my philosophy isn't to go in here and just buy all of these dips and stack. My philosophy is to wait until we either hit a true bottom, which I don't think we've even found yet, or push past that support band here and move on into the bull market. So like what I would be looking at for sort of buy zones based on what I've seen in Fantom is like this 172 zone and like this 192. For me, I would look into this zone. I would wait for Bitcoin to clear this band in that like 44 to 49 range. Once it clears that, then I start looking at alts, because once it clears that, it's going to come back and test, and alts are going to go crazy, which isn't happening right now. And so I think we just have to pay attention to that and recognize the fact that right now and this isn't financial advice, but right now might not be the best time to go and quote unquote buy the dip, or at least for me, it's not. I'm not going to go in here and buy the dip when Bitcoin's behaving erratically. It could dump even more. So what I do in this position is wait till we can clear this sort of bull market band in this challenging area we haven't been able to clear. Then I will take all of the stables I'm farming in Anchor and other places, and I'll deploy those. Then when I deploy those, I'll put that into Fantom or whatever it is that I want to do, the coins that are really crushing it. And we just have to look at Luna. Jeez, that's Luna's bull market band. So it went straight past, and the coin's ridiculous right now. My buy zones for Luna were 72 and 51. We're well beyond that at this point. Its all-time high is 103. Man, I mapped out, if it clears 103, I'm looking at like 115, 130, but it's just ridiculous. There's been so much good news for this coin. It's just crazy. It's like the one bullish coin in a pretty bearish environment. As you can see, everything else is kind of just like hobbling along. Atom wants to be bullish really bad. Dot's fallen pretty far out. Fantom was doing okay, but then it got crushed with that bad news. So a lot of coins are essentially following the exact same path as Bitcoin. And there's really not much that I want to have anything to do with alts until we clear these bull market or this bull market support area for Bitcoin, because I don't want to get stuck in these things. And I don't want these things to dump 95% if we do go all the way down, because then you get stuck in this stuff. And for me, again, this isn't financial advice, but you have to play this game smart. You can't play this game in a way to where you buy every dip, to where you have diamond hands on the internet. You have to learn how to not only get in, but you have to learn how to get out. You have to learn when it's smart to get out. You have to learn how to incrementally get out, or you just DCA in and you hodl and you never look at it again. You either play both games. For me, it does pay to take profits because then I can earn off of what I'm actually doing. I can get into stables and take those and deploy those stables, then take the profits out when the market goes up, then put that back into stables when the market goes back down, earn more, deploy those stables again, and just keep that cycle up, earning and earning and earning as we rise and fall. And so that's the way you can play the bear market and the way you can play the bull market. So I hope that was helpful. That's kind of what I wanted to go over in that spot. Let's take a look at the market today and see how things are looking. So we've got Bitcoin just nothing's doing too well. We got US dollar coin, maybe buy the dip on that. Just kidding. Don't do that. Luna is picking up slack. It's up 13%, 24 hours. It's barely down. It's just ridiculous how the drive that thing's been on. Everything else is sort of green. Nothing's really stand out. I mean, Polkadot 4%. We don't have a ton of really good plays right now. And like I was saying earlier, I'm not looking to get into alts right now. I'm looking to stack stables. That's all I care about, because then I can deploy those when we start to look bullish again. And I cannot be at the risk of losing a significant portion of my funds should we continue going down. Privacy coins, interesting. Monero. So otherwise, there's not not a lot of good things happening. Zcash, not a lot of action. Like, I'm not super interested in any of this stuff right now because of the way Bitcoin's behaving. When Bitcoin starts behaving normally and stops going erratically, then I'll be more inclined to jump back in the market. So that's kind of where I think the market's at right now. Let's look at DeFi Llama and see where we're going. So last time I talked about how in our chains, Fantom was like surpassing AVAX, but then we got that tweet from Andre, and the protocol was solidly, and then Solidex, and it didn't have a good launch. It was buggy, didn't work very well, and then the developer decided to leave or whatever, and it just made the whole thing a disaster. So a lot of money left Fantom. And so now it went from, I think it was like 12 billion, went down to 7 billion, which isn't bad. It's still number 5. It's not going anywhere. It has really good stablecoin farms. I have quite a bit in there. Fantom and AVAX still up the top. Luna's just crushing it though. Like, nothing is close to Luna. 1 month change, 64%, 7-day change. And if you're not familiar, Anchor Protocol is in Luna. And so that's kind of where I have a significant portion of where I'm at. Based on that, we see AVAX consistently moving in a good direction. Fantom, it is down in the 7 days, but I think it's moving back up. It's slowly creeping itself back up. So it's not dead. I've seen Solana with a lot of problems. I don't really have much to say about them right now. Everything else is kind of just hobbling along. Let's look at what else is going on. Osmosis, that's actually a good one to look at. There's a lot of really good plays in there, a lot of good farming. They seem to be growing really well. It's not huge right now, so it's definitely one to pay attention to. There was another one. I think it's Rose that I saw that seems to be growing really well. Kusama keeps moving. It's Polkadot's sister chain. Yeah, Rose, 63%. That's like the same as Luna. So something's going on in that one. Might be something to check out that I've noticed that's been consistently up. So anyway, that's kind of where the market is right now. Still Ethereum 55%, Terra is up to 12%. We've got Binance 5%, AVAX 5%, Fantom 3%. So I'm kind of interested to see if AVAX will surpass Binance, which would be pretty interesting because I like it a lot. I like AVAX a lot better, and I like Fantom a lot better than Binance as well. So it would be neat to have these two park themselves just under Luna. I think Luna is going to be the sort of the queen to the king of Ethereum. And Ethereum does have its new solution coming out. So it's supposed to solve gas fees and solve a lot of issues. So that'll be really interesting to see when that launches and what really happens, and ultimately what the market decides it wants to do from there. So I had a question on CoinMarketCap about where can you find says, where on CoinMarketCap does it show which exchanges you can buy a coin on? So if we come in here and we look for a coin, let's just look at Bitcoin. You go on here and then you go into market. I think it's market. And it shows you where you can buy. So you can buy Bitcoin on Binance, Coinbase, FTX, Huobi, KuCoin, all of these different places. So say that other one I was just looking at, Rose, Oasis. If you're like, where can I buy this one? You want to go into, I'm not telling you to buy this one. I'm just using it as an example. You want to go into market. And then it tells you you can buy Binance, KuCoin, Gate.io, Bitfinex, and all these different places. And the thing to pay attention to here is the liquidity and the confidence. So you want to make sure it has a pretty high confidence rating, which like you want it to be in the high, and you want to make sure the liquidity scores are near 1,000. So like 700, 500 to 1,000 is pretty good. So you can see like Binance, KuCoin, those all seem pretty good, Gate.io. But when you get down here where it's like moderate and just NA, probably don't want to play with those ones. So for me, if I was looking to pick this one up, I would probably just pick it up in KuCoin. So that's kind of how you do it. You just go into the markets, you look right there, and it tells you where everything is and what's going on and how to find it. So there was another question that I had in here. Oh, someone wanted to know how Anchor can pay you to borrow. So let's go to Anchor Protocol and let's go to the dashboard. So the interesting thing you'll find about Anchor is they will actually pay you to borrow sometimes. So if you go into borrow, the APR right now is positive. It's 2.21%. And so what that means is if you went in here and put your Luna or your ETH in here, you could borrow against it and they would charge you 12% to borrow, but they would distribute 14% in their token, the Anchor Protocol token, in exchange for borrowing. So what does that mean? That means 14 minus 12 is a positive number, which means you're going to net 2% for borrowing. So you're going to pay this, but then you can sell your tokens to repay your debt. So that way you're essentially getting paid to borrow. And the way they do this is they're sort of they're always looking at total borrow and total deposit. We ultimately want these things to kind of coincide and get close together. So that way the yield reserve stays healthy and the market stays healthy. But when they have an equilibrium, let me find where it's at. So they kind of want to maintain an equilibrium and they want to make sure this is near like zero. They've also allocated, I think it's like $100 million a year or something, I don't remember the number, to distribution. So that way they are encouraging people to borrow. So if too few people are borrowing, then the distribution APR will go up and they'll give these rewards in order to encourage and entice people to come in and borrow. If there's too many borrows and there's a lot of borrows, then this thing will be negative to encourage people to charge people and to make money for the protocol off of people borrowing. So it's kind of trying to create an equilibrium based on the ANC tokens, the ANC distribution ratio, the profit of the protocol, how many borrowers there are, and how many people there are who they want to be borrowing, to create this sort of net neutral equation to where it's either it's negative where you're paying to borrow, or it's positive to where you're essentially getting paid to borrow. To read more about on it, you can check out the docs, and it kind of goes through how this works. So the borrowing and then distribution APY and kind of how it all works. So I think the docs are super helpful. I wish it was 69. I remember back when it was 150%. It was ridiculous. But these docs are super helpful. Just docs.anchorprotocol.com kind of helps quite a bit to understand what's going on and how you repay and how you borrow and all of that. Also look at the Anchor Protocol token section, but really what it is they're incentivizing people to borrow. So if there's not enough borrowers and the protocol is designed to incentivize more people to come in, so they're going to distribute that ANC token to borrowers to encourage more borrowers to come in and ultimately put themselves in a place where they create a profitable protocol. So that's pretty much all I have to say for today. Let me check if there's any questions. But something that I think everybody should pay attention to in this sort of market and where we're at is when when I talk about what I like, when I talk about enjoying like Fantom, when I like Fantom, I like the network. I'm not saying that I'm purchasing and buying the dip on every Fantom thing right now. What I'm saying is I'm operating in there. I'm using DeFi inside that network to be able to pool stable coins. So that way, when we do look bullish, I can buy in and I can deploy stables to essentially ride the wave and then move back out and move back into stable coins. So that way I can be smart and I don't get wrecked. It's really easy to get wrecked by trying to buy every dip, by trying to pretend like you have diamond hands and by doing all that stuff. And I think it puts you in a place where you're ultimately not really able to win. And so for me, you have to play this, or try to play this game strategically and smart. So that way, when it's a bear market, I mitigate risk by staying in stables and I earn by using DeFi to get APY off of my stables. Then when we're in a bull market, we deploy, we have a little bit of fun with it. We go back in alts, we go back in ETH and all that. And then we make the money that we want. Then when we see we're getting close, we ladder out, and then we put it back in stables and watch the thing collapse. And ultimately, that's kind of how I grow and build what I'm doing. So I hope this was helpful. Hope you all have a great day, and I'll talk to y'all later. If you have any questions, make sure you put them in the comments and make sure you like and subscribe to this channel. So that way I know that more people want to hear what I'm talking about, more people like the info. And then if you have anything you want me to cover, make sure you put that in the comments as well.